Today on Crypto Channel Direct, a New York couple is being prosecuted for their role in the Bitfinex hack. UK authorities track down and suspend a money-laundered NFT transaction. Also, a scorecard of the best crypto Super Bowl commercials. We also speak to an expert in identifying the up-and-coming trends in Web3. Stick around to hear more. I'm Claire Ross-Brown, and welcome to CCD, where I'll be bringing you the news you need to know, powered by Concordium. A new Bitcoin criminal case touted as the heist of the century is testing the US's ability to crack down on crypto cybercrime. The prosecution of New York husband and wife Ilya Lichtenstein and Heather Morgan commenced last week on a suspicion of stealing $3.6 billion in Bitcoin associated with the infamous 2016 Bitfinex hack. The US Department of Justice states the couple used a complicated web of transactions, including layering, peel chains, chain hopping, and darknet market conversions, to transfer 25,000 of the 119,754 Bitcoin stolen by hackers. Morgan and Lichtenstein are assumed to have moved their funds through the dark web marketplaces and back into various coin exchanges, but were unable to withdraw or spend their coins because of AML and KYC restrictions. The couple's downfall may have been because Bitcoin is easily traced on a financial ledger, though they both did not know where to cash out. According to The New Yorker, the couple don't seem like hardened criminals, especially Morgan, who presents herself as the crocodile of Wall Street, a surrealist TikTok performer, artist and rapper. However, in a recent Irish tech news podcast with global AML and KYC expert Justin Chu at Capital and former police officer in Singapore suggests differently. Now, he asserts one reason why someone may resort to being in the public eye instead of keeping a low profile could be to build a following and certain style of credibility around their identity. Credibility where people are so convinced it couldn't possibly be them and to shift attention away from their crimes. Do you think that personal identity should be aligned with blockchain addresses when it comes to AML and KYC validations and advancements in cybersecurity and fraud detection? Let us know in the comments below. And also, if you're enjoying today's show, like and subscribe and join the discussion in the comments below. The United Kingdom's tax authority has seized 3 NFTs and arrested 3 people on suspicion of attempting to defraud the tax office of $1.9 million. In a first for British authorities, as part of a value-added tax fraud probe, NFTs were seized by officials alongside $6,700 worth of cryptocurrencies as a warning to anyone who thinks that they can use crypto assets to hide money. The HMRC noted that the suspects used several measures to cover their tracks, including prepaid mobile phones, false addresses and invoices, VPNs and stolen identities. Earlier this month, the US Treasury Department released a report describing how the NFT art market fits perfectly into money laundering schemes. The report points out that NFTs lack a definitive financial classification. Now, given their unique nature, platforms that facilitate NFT trading are virtual asset service providers, making them subject to Financial Crimes Enforcement Network regulations. So the Treasury report authors argue that NFT's main advantage for criminals is that there is no need to move digital art objects physically, and therefore favourably perpetuating money laundering environments. Much of the recent regulatory enforcement focus has been on decentralized finance instead of NFTs. And just this week, the US Securities and Exchange Commission announced actions against crypto lending company BlockFi over its failure to register high-yield interest accounts the agency deems to be securities. Now, BlockFi will pay $100 million in settlement for failing to comply with what many believe to be an outdated and antiquated law, the Investment Company Act of 1940, created long before the advent of cryptocurrencies. Now, should entire new sets of laws be formed that are more aligned with the evolution of crypto assets? Let us know in the comments below. We have with us today Matthias Weissel, the CEO of Virum Capital. Now, I'm going to ask him about what trends that he's seeing in blockchain and business as someone who heads a company that designs, builds, and invests in Web3 companies. Welcome, Matthias. Thanks for joining us.
Thank you so much for having me, Claire. I really appreciate your time.
Now, Matthias, we've all heard about DeFi and NFTs and even the metaverse more recently, but can you tell me a little bit more about the current business trends in Web3 space?
Sure. If we can separate the trends in the design element, the building element, and the investment element, which are also the areas that we at Verum Capital work in, is on the designing thing. I think a lot of things have happened around token economics, new government structures in the form of distributed autonomous organizations, or even now more recent happenings around play to earn via token incentivization. So on the building element, this is more infrastructure, I would say. It is important for most people that it is fully decentralized. It is important that there's no single point of failure. It is important that it's interoperable and that the transactions are cheap. And on the investment element, there has been a heavy push around DeFi, staking, yield farming, decentralized exchanges, around DAOs with new areas of governance, and of course around metaverse infrastructure, security infrastructure, and in general just projects where the investment profile has now changed from usually fund managers to now developers or early investors.
Excellent. And many of the trends that you're discussing, Matthias, they're very future facing. But where would you say that the short, medium, and long term focus is? And can you give a timeline as to how these trends will roll out over the coming years?
Sure. In the short term, we would see that NFT marketplaces are going to grow even further, as they have been recently. We would consider this as customer engagement. Around the infrastructure level, we will see a lot more bridges, oracles, and other security infrastructure. And then on the cost and speed element, we will see more and more focus towards proof of stake and layer twos. Around medium term, we will see more dynamic NFTs, so real world interaction, connection with data. We will see a lot more microtransactions where subscriptions will take place per second, payments will take place per second. And around IP, there will be a huge push around IP licensing. And in the DeFi space, we will see a lot more regulation coming. In the long term, we have built in the short and medium term the enablers of the metaverse. Now in the long term, it is the metaverse really, and DAOs and decentralized finance that will now reach its full potential in a decentralized manner.
Great. Thank you, Matthias. Now, we've spoken mostly about future trends, but there are other Web3 ideas that have come and gone, and some successfully and some less so. What do you feel has worked to set the foundation in this space, and also what's failed?
If we take the last 5 years at Verum Capital, where we have built more than 70 blockchain solutions, companies, projects, and so on, I would say what we see has failed recently a lot was consortia. Consortia, why? Because a lot of people believe that the blockchain is great on marketing purposes, but in reality, you have to give away also some voting rights. You have to give away and open up to your community. And I think for a lot of corporates, this is very challenging, of course. What also we have seen that hasn't really been working is supply chain. Supply chain, why? Because often this connection between digital and physical world hasn't really been utilized properly. And these are two elements that, if I could summarize them in the whole enterprise solutions, that a lot of private blockchains have been built that really where we didn't see the value add after all. So I guess what has happened really is on the other spectrum, DeFi, for example. We can prove that liquidity has really been very essential to the growth of DeFi. We can see that DAOs also have come up with some very exciting business models. Some are better than others, some are more regulated than others, but we can see that staking recently, we can see there's a lot of returns generated via staking. And then, of course, decentralized exchanges. Just to speak of the volumes of decentralized exchanges, we can prove that they have been working. And even though now we have 1% probably of the wealth of the entire world that is crypto asset based, which is quite a significant sum. In my opinion, in terms of usage, we're still like in the first inning or in the first quarter. Therefore, we have a long way to go here.
Great. Well, thank you so much, Matthias. Pleasure speaking with you.
Great. Thank you so much for having me, Claire.
Thank you. Talk soon. Bye.
Bye.
Finally, during the Super Bowl 56 this past Sunday, crypto exchanges FTX, eToro, Crypto.com, and Coinbase all debuted crypto advertisements during the traditionally biggest night for commercials all year. With rising demand in crypto, Super Bowl crypto ads stole the limelight from traditional businesses on both television and social media platforms. FTX, founded by Sam Bankman-Fried, created an advertisement featuring comedian Larry David. Now, when David dismisses the FTX app saying, "I don't think so," the commercial reminds us, don't be like Larry, don't miss out on the next big thing. Crypto.com's commercial featured basketball legend LeBron James having a conversation with a younger version of himself from 2003. The current LeBron lets his younger self know, "I can't tell you everything, but if you want to make history, you gotta call your own shots." Taro's Super Bowl and Flying Your Way showed an investor asking for advice from the eToro community on whether to invest in crypto or stocks. And as a homage to the popular meme-com Shiba Inu, eToro's commercial even featured a Shiba Inu dog. Coinbase's commercial started with its logo bouncing around and then quickly changed to a QR code that silently hopped across the screen. The QR code redirected users to Coinbase's landing page that promoted a free Bitcoin giveaway event. Soon after the promotion began, Coinbase's website crashed temporarily due to the sudden influx of heavy traffic. What were your favourite advertisements from this year's Super Bowl? Let us know in the comments below. Now let's jump into our final segment, Learn with CCD. And this week, we're discussing Bitcoin futures and how to gain exposure to Bitcoin without having to hold the underlying cryptocurrency or be directly subjected to volatile price fluctuations. So a Bitcoin futures contract works the same as futures contracts for commodities, stocks, or bond indexes. It allows investors to speculate on Bitcoin's future price without taking ownership of Bitcoin at the end of the contract. Now, long-term investors can use Bitcoin futures to hedge against their spot positions, while short-term traders can use futures contracts to move in and out of positions quickly to lock in gains. Bitcoin miners use futures contracts to lock in prices that ensure a guaranteed return on their mining investments, regardless of short or long-term Bitcoin price action. Large institutions can even participate in unregulated cryptocurrency markets by using futures to lower their risk of exposure to Bitcoin. A Bitcoin futures contract is a complementary investment vehicle that enables investors to curtail their risk exposure to the volatile crypto asset class. And it's just another way to invest in Bitcoin that's better suited to traditional investors and traders. Thank you for joining us today on Crypto Channel Direct, powered by Concordium. Now, don't forget to like us and subscribe by hitting the button below. And we'll be back next week with the news that you need to know. Until then, I'm Claire Ross Brown. See you next time.